Good morning, it's Jonathan Barrett with this week's Market Buzz, and markets are buzzy, there's no doubt about it. Obviously lots happening out there in market land. I guess rolling off from last week, weaker than expected August jobs data in the States, only an increase of 22,000. Expectations are up at 75. Still low numbers, which is a concern. Unemployment rate actually ticked higher to 4.3%, and I think the market was quite conclusive that the Federal Reserve will lower rates by 25 basis points in the States when next they meet, which is around about 16th, 17th of September. Whether or not we get another one, a higher one, or another one towards the end of the year is something we'll discuss later in the report. Trump warns on tariffs, more tariffs, semiconductors, Nvidia and AMD all under pressure. Nvidia actually up 4.5% on the back of the news. Silver continues to climb higher. Gold continues to get record highs, and oil slides on the last OPEC meeting we had, and expectations are an increase there in oil supply. Also, GDP in Australia was quite strong, up 0.6% last week, and year on year was 1.8%, and that's not too bad actually when you really consider what's happening out there in the world. Time will tell on that. In this report, we're going to talk about the unemployment number in the States, linking that to the PCE index, which is the Fed's preferred inflation gauge, and try and work out what's next in terms of where we see interest rates in the States actually move. And to that effect, what will the fallout be in terms of valuations in equities, and whether equities will continue to move higher or actually come lower. Okay, let's start off. I guess most importantly there, non-farm payrolls were mentioned. They were only up by 22,000. That is not a good number. We actually also had a revision as well. So once again, we've got very weak data starting to come through. Now, Donald Trump has been persistent on Powell to say it'll all be on him if the economy continues to slide, because he hasn't taken up and reduced interest rates when the economy needs it. Against that, obviously, we've got the personal consumption expenditure index hitting a record high. Now, what does that tell us? It tells us that inflation is still very sticky over there in the States, and it's continuing to trade a lot higher, and there's no new record highs. It hasn't come back. There's still big issues there. We are not within the Fed's target market. We're still above that. That remains a concern, and that's why Powell hasn't moved on interest rates, although I do feel that he's actually been pushed into a corner, and you'll probably see a token 25%. Now, whether or not that moves into 50%, I think time will tell. I actually don't think that's the case. I think whilst you've got inflation at these levels, then, without the full effects of the tariffs which have been put in place, it remains a problem. We're going to see a lot more of these tariffs sort of affecting inflation, and if that's the case down the track, we need more time to see this all start to fold through the economy. And we're not going to see that. It's not going to be another month, 2 months, 3 months. It's going to take a long time, because we're still trying to negotiate what the tariffs will actually be. History has told us that this will be inflationary, and I think whilst you have the PCE at record highs, continue to trade higher, then that to me is a bit of a concern. In this week's report, I actually put put the inflation rate over the unemployment, the PCE. I put that together so you can actually see what's actually occurring, and why, as an economist's point of view, why are we sort of that concerned? Why are we in Powell's camp as opposed to Trump's camp? And you get a sense of the measure, the cost expenditure, the personal cost expenditure, is just continuing to rise. There are concerns. There are also other inflationary concerns there in the market, but you get a sense why we are a little bit worried on that front, and why we think it'll only be a token interest rate movement. I don't think we'll see another one until the rest of the year, unless things deteriorate that quickly. And if that's the case, well then obviously the Fed will do what it needs to do. But as I mentioned there, you've got record high core PCE. You've got sort of, a concern that this is going to continue. We're outside the Fed's target for inflation, and whilst that remains there, it remains a worry. So I do get a sense that we'll only get a token. Yes, unemployment's got some issues. Yes, we know where it's a weaker SEC at the moment, and I think that's why Powell is actually looking to reduce rates. Remember, Powell also said that he's going to look through the concerns and sort of then reevaluate. And I think what he's saying is, okay, well, we haven't seen the drastic effects we've seen on inflation and tariffs. They're yet to come, but we'll look through those, expecting that they won't be that hard, but we'll give the market what it needs. Obviously, 16th and 17th will be a key in terms of what we see, and we'll obviously check the wording. Did move last time, so it'll move again this time, and with that we'll get more clarity, I think, on where interest rates will be going in the States. They have got room to move, but I do think that inflationary expectations are the ones that they're trying to keep on hand. So I think if anything there, have a good read through that report. I do think what all of that means, it just means that that equity prices remain at this higher end of the range, and I'll probably see some form of correction. This has been something we've laboured for some time now. I still expect that to occur, so quite happy to be on the short side of the market. This week's we've got quite a few things out there. Obviously, a softening labour market, persistent inflation. We know what that is. We've got CPI coming out of the States this week, alongside annual benchmark in terms of some revisions. We'll see what that happens. University of Michigan consumer confidence again will provide further insight into how the economy's, the sentiment there. So that's going to be quite important. Over in Europe, we've got ECB, expect to keep rates unchanged. Let's say we knew that was going to be the case. And I guess we've got some UK also be reporting GDP. So quite a lot out there for this week. Let's see what happens. Let's have a look at the positions and a few charts. I'll just, as mentioned, gold is something we've talked about quite some time. We've been long gold for quite some area, which has been good. So that's been showing some really good returns for us, and also silver. This week's trading, we're sort of focused on gold. We just thought it'd be a good idea to relook at it, particularly we are at record highs, and I think the key is whether we feel that it's going to continue. I think it will. There's no reason why it can't. When you look at the main fundamentals and the drivers, I guess the most important thing is prospects for interest rates to adjust. Remember, holding gold, it does cost US dollars to hold it, and if interest rates start to go lower, then it increases its appetite. I think another factor is the US dollar. The US dollar remains weak. We've spoken about the US dollar remaining weak because that's going to support exports out of the States. And if you've got these tariffs, this is another thing where they're going to keep the US dollar under pressure. So that's certainly going to help gold as well. Traditional geopolitical tensions, and I can actually see this as a concern across the board. And when you look at the powers that be, when you look at Russia, China, India, States, you can get a sense, and there's also obviously what's happening, in Israel, also the Ukraine. I get a sense that geopolitical contentions are there, and I think you'll find that people will remain moved to gold just on the basis of that. When you do look at that, it's the ETF side of it, and you can see there's a good influx of people going into the ETF market, and I think if anything there, that's looking for that surety, I guess, or just putting some in your portfolio. Also, you've got to think that when you are looking at central bank activity, they remain net buyers of gold, and that's certainly going to support prices. So onwards and upwards she goes. I think gold, let's have a look at the chart, see if we can glean anything on the technical side. The good thing about this chart is this pennant, in my mind, was just a lay down in terms of being long gold. And I like those sorts of formations, those technical formations, because they tell us the market can go higher. And that's broken, and when you look at where it can actually head, 36, 3600, 3650, still looks quite strong. So whilst we see the fundamental side, we're also seeing the technical side. Now, when you do look at the technicals, you come down here and you have a look at momentum indicators, they're right on their highs. Now, they can still do a lot of work up here. There's no real sense of going into correction, but I think if we get a correction and the correction does come back to that 3,500, then people are still going to be quite bullish. As long as it stays above the high here, or above these highs here, you can be thinking that she will still trade higher. So when you look at gold, we've got good fundamental reasons, We've got good technical reasons to remain long and also buy on the dip. Let's have a look at the silver market, because that's another one we've been quite bullish on. And there we go. Silver market gives you that same sense where we've gone to those highs up around that 41. I do think there's a lot in silver. Again, the main reasons there: fundamental demand, solid demand out of China. It's still a very good story, and I continue to sort of advocate being long silver. Has been a great trade for us. As long as it stays above that 39.50, I'm sort of quite happy for it to continue to trade onwards and upwards. Any correction, I think, is a correction in overall bull market, so still happily being long there. Well, that's about it from me for this week. I hope everyone has a great trading week. Lots of things out there. Stay tuned for next week, and bye for now.